Hey there. How's it going today? Hey, when it comes to the VA home loan, although it costs much less than other mortgage loan products, zero down does not mean zero cost. There's these things called closing costs that are involved in all mortgage loan transactions, and this includes the VA home loan. But we'll talk about this, other subjects, and answer your questions today on this edition of the VA Mortgage Minute brought to you by Veterans Lending Group. Hi, I'm David Carter, National Director of Education for Veterans Lending Group, and a U.S. Navy retiree.
Hey guys, my name is Lee. I'm National Educator for Veterans Lender Group as well a U.S. Navy submarine veteran as well.
And just to give a little more background, although I'm not the knowledge on the loan piece, I run the education department here. Lee has years of background in the VA home loan as well as the mortgage industry, so he's the smart guy. I'm the one that kind of keeps the flow going. So Lee does most of the talking here. Anyway, as we mentioned, as we started out, the there are these things called closing costs, and the VA home loan is not exempt. Sometimes when we're dealing with clients, we get the, hey, I thought this was no cost or zero down. Well, true, zero down is zero down. That saves you a lot of money. But we do need to talk about these things called closing costs because they are included. So, Lee, if you could, I'm going to toss it over to you. Tell us a little bit about these closing costs, what they are, what they mean to a particular buyer.
And you're absolutely right in regards to a lot of clients have the belief that if it's a zero down program, that means there's no money out of pocket in the beginning, and that's not necessarily true. And it all depends on how the transaction goes. But to simply define what closing costs is it's all the cost to close on your house, essentially, right? There's a lot of third-party people involved, and just to kind of give you a perspective, there's about 27 to 35 pairs of hands that touch your file, and a lot of them are third-party people. There's government stuff, there's county stuff, state stuff, as well as third-party people that are involved in helping getting your house closed as well. So some of the fees and the closing costs that are required go to pay for those services to make sure everything's nice and clean. You may not, as a buyer, be involved with them very much, but they are very a key part in the process as well.
Yeah, and I think this is one thing that throws people off because there are so many little things that go in there. Like
Hmm.
the funding fee or the appraisal fee or
Hmm.
and all the other stuff that goes into closing costs. But can you talk a little bit about how it's a lot of times there's a lot of estimated stuff that goes in there too. So
Hmm.
that's why sometimes at closing there's money left on the table.
Right. So in most cases, a lot of people can overestimate the closing costs because there's a lot of things that depend on closing costs, especially when it comes to the date and when you close and what time of the month. So one of the things that as far as a lot of the fees are very relatively fixed, but some of the fees are dependent on property taxes and home insurance, and that has to do with something called escrow, or and in regards to like how much property taxes you have to pay up front as well as home insurance. If a lot of people don't understand or don't know is that you have to pay like the first 12 months of home insurance up front, and then they're like, why do I pay my home insurance in my monthly payment? It actually pays for the next year. So that's actually how home insurance you pay for the first 12 months up front with some reserves, and then your monthly payment actually goes toward paying the following years home
Property
insurance.
taxes work the same way, Lee.
Sort of. So property taxes are essentially, you'll have your reserve that you have to pay for up front, and then there might be some proration because uh, depending on when your first mortgage payment ends up being, because it may not be another 30, 60 days, you have to make up for that time where property taxes need to be paid for. By the time when it's due, you have enough that comes out of the escrow account to have those paid for. So you kind of pay for some of it ahead of time, but you only pay for the months that you lived in.
Right, right. Now, how can a buyer, a potential buyer, take care of these closing costs? What are some of the ways that they can
Mhm.
cover this when at their closing transaction?
There's the most obvious one is them paying it for themselves, and that's actually the easiest way, honestly. And then the other extreme version is having the seller pay for it. So that's having the seller negotiate it in the purchase price or add it to the purchase price. At the end of the day, a lot of it comes from the seller when it comes from a purchase transaction. A lot of people think you just roll closing costs on top of the loan and get closing costs paid for. If that were the case, then everyone would be buying a home, you know.
Yeah.
Um, So yeah, you can't just roll closing costs on top of the loan because it has to be appraised for, and the seller has to say yes.
Right.
Still part of the negotiations. So now one way to kind of look at why would you not have the seller pay for it, and why would the seller pay for it? About 2 years ago, sellers would pay closing costs depending on how it was, negotiated. But another a lot of what a lot of people don't think about is that the closing costs the seller is paying for, it comes out of their profit of their house. So if you're paying your own closing costs, that means the seller gets to make more money. So that's the one side of it. Another way to get closing costs paid for is hopefully the appraisal comes back a little bit higher than the purchase price. That's one way we can negotiate closing costs in. There's ways to manipulate your interest rate to kind of get closing costs paid for, and that's more of kind of a one-on-one conversation with the loan officer. Another option is you can get a gift from a family member or friend. And I say family or friend or family member or friend. I've had a client that got like $10,000 of closing costs from a friend they haven't seen in like 10 years. I don't know how. That must have been a really awesome friendship. But they were able to get that done. Even from a family member, they can get that done as well. And then one option is probably one of the last things we would ever suggest, or just have it in our back pockets just in case, is take out a loan against your retirement account. And this is different from a draw from your retirement account. We're talking about taking out a loan. So a lot of active duty members these days have what's called a TSP. So you can actually take out a specific residential loan against your TSP account, and it would go toward paying the closing costs. And the loan could be put out for like 15 years. The interest rate's like 1 or 2%. So the payment's really minimal, and it really already comes out of your paycheck. So it's relatively easy. The last thing we would ever suggest, and if it's like dire need, is, and if you have room for it, and this is something you would talk to your VA home loan specialist about before you do anything, is take out a personal loan from a bank.
Yeah. And if I remember correctly, Lee, the VA home loan product is the only product that allows you to take a personal loan to pay for, an unsecured loan to pay for your closing costs. Did I get that right?
It's not so much it's the only VA loan, but it's some of the other home loan programs allow for that. It's just it's the payment that's being counted against them. So that's one thing that we have to consider. The VA does allow more flexibility when it comes to that piece, and in regards to how much of your debts can be part of your income. But that's, like I said, that's something that we don't advise very often unless you really, really need it.
Got to watch that DTI, that debt to income ratio.
Absolutely. So
Lee alluded to something that we'll probably talk about next episode. In this market, it's really hard to get a seller to cover those closing costs, but in a different market where it might be more of a buyer's market, that may be coverable. But on our next episode, we'll talk a little bit about the market, how things swing about, and as we get there. But hopefully you've learned a little something today, or maybe dispelled a little bit of the myths or misperceptions. Because unfortunately, there's a lot of that involved in the not only just the mortgage industry, but especially the VA home loan product, that benefit that you've worked so hard to earn. And this is why we do what we do here at Veterans Lending Group. We provide an entire education library free of charge to anybody who's interested. Go to vahomeloanbootcamp.com. You can learn more about not only the VA home loan in general, but you can learn specifics about how to use it to generate income and some other things. So great tools for you to use, and more importantly, to help you become your own best advocate. That's why we do what we do. So before we get ready to wrap, let's see if there's any questions out there. If anybody's got anything they want to ask me or Lee. Lee's probably going to be the one to answer because he's a smart guy. I just talk a lot, but yeah, it's amazing how much information you learn as you keep going along with this too. Yeah, I don't know about you, Lee, but it's like every day I'm learning something new about not just the VA home loan product, but other things about benefits and other stuff that when it comes to our service, it's really amazing the amount of information out there.
Oh, I mean, I'm learning something almost every day. So there's everything. That's what's cool about this industry. Even though you feel like you've done hundreds of transactions, the next one is probably going to be very different compared to all the other transactions we've ever done. So we're always learning stuff, and we're always talking to the VA to make sure we always get the right information and be able to get that story out and have people understand how their benefit could really be used to their advantage.
Yeah. Well, I'm not seeing any questions, and we like to keep this under 15 minutes because we are cognizant of your time. But we do want to share this information with you on a bi-weekly basis. Make sure you tune in next time to the VA Home Loan Mortgage Minute, where we talk about these timely subjects that help you learn more about your benefit. And if there's a subject in particular you want to learn more about, drop us a note in one of the comment sections or wherever you find this on social media. Let us know if there's a particular subject you want to learn more about, and we can cover that in the VA Mortgage Minute. But seeing that we're not going to have any questions today, which is cool. Hopefully, wait a sec. We got.
You're welcome, Deborah.
A question from Deborah. You guys answered my question without me asking. Yeah, that's what we want. So as far as using a TSP residential loan for closing costs, so thanks. You're welcome, Brenda. Deborah, I'm sorry. This is why we do what we do. And this is why we take this short amount of time just to kind of throw some information at you and hopefully help you become your own best advocate. So on behalf of Veterans Lender Group, sponsor for today's program, myself and Lee, thank you for your time and attention. This has been the VA Mortgage Minute. We'll see you next time. Have a great day.
See you guys.